Welcome back to Dinar Community Channel behind closed doors. In the quiet halls of regional branches and the confidential corners of high-level finance meetings, bank employees often have conversations about the Iraqi Dinar (IQD) that diverge significantly from the scripted responses given to the general public. These behind-the-scenes discussions reflect a mix of skepticism, curiosity, caution, and, among a select few, quiet anticipation. To the average bank customer, the answer is almost always the same. We do not currently exchange the Iraqi dinar, or, it's a restricted currency. But internally, those who manage foreign exchange desks, wealth management accounts, or international wire systems are aware that the dinar is not just another exotic currency. It carries with it a complex history, a passionate following, and the potential for major financial disruption, should a revaluation (RV) occur. There's a growing body of evidence that employees at certain financial institutions are trained to maintain plausible deniability when asked about the dinar. Some are instructed not to engage in speculative conversations with customers, while others are told to redirect inquiries to corporate communications or legal departments. Yet off the record, these same employees may admit that they've been briefed on contingency scenarios involving currencies like the dinar, particularly when certain geopolitical or IMF-related events are triggered. At the teller level, most employees genuinely have little to no access to high-level currency plans. For them, the dinar is not a factor in their daily operations. However, those working in foreign currency vaults or FX transaction centers are more likely to have heard murmurs. Some have reported that their institutions, particularly banks like Wells Fargo, JP Morgan Chase, KeyBank, and Bank of America, have previously held meetings to review unlisted currencies that could be activated pending sudden rate changes. While the content of these meetings is confidential, insiders say the IQD is frequently included as a currency to monitor but not transact. One foreign currency specialist at a mid-sized U.S. bank revealed in a private conversation that the IQD has been labeled an event-driven currency, meaning that it holds little day-to-day volume but is under surveillance for potential triggers that would warrant a rapid change in policy. In such a case, the bank would be prepared to enable systems for dinar exchange and redemption within 24 to 72 hours. Others working in compliance and risk departments quietly express concerns about the chaos a sudden revaluation could create. The issue isn't just logistical, it's reputational. Banks do not want to appear unprepared for a mass inflow of customers with IQD if the currency suddenly becomes tradable at a significantly higher rate. Many institutions are reportedly compiling internal procedures for handling a large volume dinar redemption event while simultaneously denying to the public that anything is underway. In the back offices of private banking divisions, where clients with millions in net worth are managed quietly and discreetly, some wealth managers have reportedly encouraged their clients to observe developments in Middle Eastern currencies. While rarely making direct recommendations, these advisors hint that the Iraqi dinar, among other currencies, may offer opportunity aligned with geopolitical reform. What's particularly telling is that these recommendations are almost always shared behind closed doors and never appear in formal portfolio allocations or SEC filings. There are even rare instances where clients have walked into banks with large amounts of dinar and requested to exchange or deposit them. Most banks reject these requests. However, certain private banking arms have flagged these customers for monitoring, not for criminal activity, but because of the potential future value they may bring. If a revaluation were to happen, these same clients would become priority candidates for structured wealth conversion and high-level financial services. Interestingly, IT professionals within major banking systems have also been involved in preparing for currency events. Internal memos, though never publicly released, reportedly include protocols to instantly update rate tables for over 160 currencies globally. The Iraqi dinar, while not active for public trading in most systems, remains tagged in these databases with flexible fields, meaning the infrastructure is in place to activate its exchangeability instantly if triggered. This isn't standard for all currencies and suggests some level of advanced consideration. Human resource personnel within major banks have also noted a rise in job postings over the past few years for roles in foreign exchange logistics, currency compliance, and exotic currency operations. While many of these roles reference a global basket of currencies, insiders have quietly admitted that applicants are asked questions specifically about the IQD and VND (Vietnamese dong) in interviews. These questions focus on the candidate's understanding of emerging market dynamics, central bank revaluations, and IMF intervention strategies. In internal chat groups and encrypted messaging platforms used by bank employees, discussions about the dinar remain cautious but present. Some employees have admitted to holding dinar personally but are warned not to disclose such holdings publicly. One compliance officer reportedly said, "You don't want to be the guy inside the bank who made a fortune off a currency that just revalued, unless you want every regulatory body looking into your accounts." Among those who have worked in international wire departments, there's a recognition that the SWIFT system and certain ISO 20022 updates include provisions for real-time FX rate changes, including those affecting dormant or restricted currencies. Some banking insiders believe these system upgrades weren't just about modernization, but about preparation for future financial resets, of which the IQD revaluation may be a key component. There are also regional differences in how bank employees perceive the dinar. On the West Coast, where international trade with Asia and the Middle East is more active, employees tend to be more aware of the currency's background. In states like Texas and Florida, where military veterans and contractors returning from Iraq are more common, there's a higher likelihood that bank employees have heard first-hand stories from customers who purchased dinar while deployed. Bank branches in cities like Houston, Miami, Phoenix, and San Diego have experienced spikes in dinar-related inquiries over the years. In some cases, managers have been briefed by regional directors on how to handle these inquiries without fueling speculation. While the official stance remains that there is no active exchange, some branches have quietly updated training manuals to include a response protocol in the event that the currency becomes redeemable. One former regional FX coordinator for a large banking institution recalled an internal memo that warned employees not to initiate or confirm any speculative conversation about the Iraqi dinar. It explicitly instructed staff to avoid fueling investment narratives that may compromise the institution's public neutrality. Yet that same memo contained a section outlining rapid activation procedures, including communication templates for notifying select clients about changes in FX services. Some mid-level managers have taken it upon themselves to prepare in silence. A few have compiled lists of high-volume customers known to hold dinar, with the intention of reaching out immediately should the currency become exchangeable. These lists are unofficial and stored discreetly, often on personal devices, away from corporate oversight. Why? Because these managers see an opportunity, not just for clients, but for institutional profit and retention. Another aspect that bank employees talk about behind closed doors is the expected reaction time if the RV happens. Some estimate it would take 24 hours for banks to fully activate the systems, while others say it could be a week depending on the legal guidance received from the U.S. Treasury or the Federal Reserve. Some insiders speculate that only certain branches, possibly referred to as Tier 1 redemption centers, would handle high-value exchanges. These branches are rumored to already have additional staff trained in handling currency revaluations, along with non-disclosure agreements ready to be signed. The question of non-disclosure agreements (NDAs) is another hot topic. Some bank insiders believe that certain clients who exchange large sums of dinar post-RV will be required to sign NDAs in order to access contract rates or special programs. While this remains unverified in public documentation, internal chatter suggests that legal teams at major banks have prepared template NDAs with currency exchange language in the past 2 years. Behind the veil of silence, one of the most consistent threads among bank employees is this: we're told not to talk about it, but we're watching it closely. This admission, often whispered at after-hours networking events or in closed-door team meetings, says more than any public statement ever could. For all the official denial, there is clear institutional awareness that the Iraqi dinar is not just some forgotten relic of a war-torn nation, it's a currency with transformative potential. While bank leadership keeps its lips sealed in official press releases, the ecosystem within major financial institutions is far from inactive. From IT departments and risk assessment committees to wealth managers and private client advisors, quiet conversations continue to circulate about what happens if. The truth is, many banks are quietly preparing, just in case. And perhaps that is the most telling sign of all. When banks train employees not to speak about something, create infrastructure to activate that very thing, and develop legal protocols around it, they aren't ignoring it. They're waiting. The Iraqi dinar may still be dismissed by skeptics on the surface, but behind closed doors, the tone is more cautious than dismissive, more curious than indifferent. For many in the financial world, the revaluation of the dinar isn't a matter of if, but when. And when that moment arrives, the institutions that were quietest may be the most prepared. Like and subscribe for more videos.